Welcome, everybody, to another edition of the Real Estate Mogul MD. I'm excited to have a special guest with us here today. My name is Brett Riggins. I am an avid real estate investor, entrepreneur. I'm just really passionate about real estate and the ability now also working with physicians ourselves, helping them launch into the real estate world as well. And on this podcast, we get the opportunity to share real world experiences, the journey, the to dos, and more importantly, the not to dos, which could be painful sometimes. So, like I said, I'm excited for my guest here today, but always with me, I also have Mr. Thomas Geib, co-founder of Physician Wealth Systems. Thomas, how you doing today?
I'm doing great.
Splendid, splendid. All right. And man, this guest, just super excited. I'm excited to get into the conversations. Got plenty of questions for you. Is a board certified urologic surgeon, real estate investor, and content creator himself. On the Darwinian blog, he writes about the journey from burnout and debt to empowerment and financial security. That just embodies everything that I'm excited to talk about. Everybody, please welcome Daniel Shin, MD. Daniel, welcome to the show.
Hi, Thomas. Hi, Brett. Really happy to be here. Thanks for having me.
Very, very exciting. So the first thing that jumps into my mind, Daniel, can I call you Daniel? Is that
Yeah,
good?
perfect.
All right, perfect. Is Darwin, the name Darwin inside the Darwinian Doctor. Tell me a little bit about where that name comes from.
Sure. Well, it was a couple years into my attending career as a urologic surgeon. And as you mentioned, I was feeling strangely burnt out, and it was a surprise to me. But I think some of it was that I had achieved all of the short-term goals that I had for myself. And I was just looking for something as a creative outlet. As you go through medical training, a lot of times you lose a lot of the things outside of medicine that give you joy. Things like social interaction, working out, hobbies. A lot of these things kind of fall by the wayside. So a couple of years into my attending career, when I had kind of achieved those goals, I looked towards writing as a creative outlet, and I started the blog. And when I was thinking about a name for it, I was thinking about sort of what I wanted as a philosophy for my life. And I settled on the idea of continual evolution, always trying to improve, always trying to get to that next step. And who's the man of evolution but Darwin? So I settled on the name the Darwinian Doctor.
Very cool. Yes. Another thing jumps into my mind. Tony Robbins has this term that he's coined, constant and never ending improvement. It kind of touches on that path of evolution in a way that you've angled that towards your goal, right? And this idea that you are creating your life and creating that evolution. Does that align with the target of the name?
Absolutely. I think it basically is the idea that when you're talking about the journey of your life, I don't think benefits anyone to be fully content and fully just kind of static in your day to day, because I think that's when you stop living. So always having something that you're working on and evolving towards, I think is a good life philosophy. Personally, that's what I think.
Yeah. Yep. Setting that direction, and something that I'm focused on right now, Daniel, is enjoying where I'm at currently, not holding that value or that happiness on that end goal, but that end goal providing that direction, right? That constant reach, but absolutely enjoying where we're at.
That's a really good point, because I think the fallacy of always striving towards something else is feeling unsatisfied with where you're at. And I don't think you necessarily have to feel like that. As you say, it's important to enjoy the journey as well. And I think that's something that a lot of us struggle with. And it's something that I have to remind myself. I have to remind myself and have gratitude for sort of the things that we already have and the blessings that we have in our life already, even while striving towards goals.
Yes, absolutely. Just the blessings are all around us. And even where you're sitting right now, Daniel, if you are able to look up, and what everybody can't see, that the blessings are surrounding you, and only in that moment, but what you're set out to do this day is such a journey. It brings a smile to my face. Thomas can align with this one too, because he gets to work from wherever he wants to in the entire world, right, Thomas? So
Yeah, that's right. Yeah, right now I'm actually in Colombia,
yep.
Medellin.
Yep.
So
So And that's set forth by a goal that was targeted and reached for. So wonderful, wonderful. On this evolution, I want to just jump back to the beginning, Daniel, and tell me a little bit about your medical journey. 36,000 feet in the air. Where'd you start? What made you want to start in medicine?
I think it comes back to just a few basic things. When I was young, I was in a first generation Asian immigrant family, and a lot of stereotypes have some element of truth to it. And when I was thinking about what I wanted to do with my life, my parents definitely did encourage me to seek out a few different things, doctor, lawyer, engineer, something like that. And the reason why they did that is because we came from, pretty humble means. We struggled with money. And when you think about these things as from a parent's point of view, a lot of the reason why it's attractive as a choice for your children is that it offers a very consistent and respectable source of income. And, that when I was going through my educational career, that didn't really define the reason why I went into medicine, but it did affect it. I went into medicine because I wanted to help people. And I understood that doctors did that. But I also did understand that it would be sort of a gateway towards financial stability for my family. And all of these things are important. And I think oftentimes the financial aspects of medicine are minimized, and it's, seen as a little bit taboo to talk about it. But I think it's important to realize that there are aspects of income that do affect specialty choice and do affect the choice to go into medicine. And has to be a conscious choice because you incur a lot of debt and you incur a lot of opportunity costs by pursuing that track because it takes so long to become a doctor.
Yeah. Kind of from the outside perspective, mine's just a little bit different. I'm not a physician. I spent some time in school, and I hear physicians speak of school as their education career. It's just a kind of just a different perspective, but along with that educational career comes with that debt, and that debt can then step into that next phase of that burnout to trying to recover from that debt, right?
Absolutely. I think a lot of studies have shown that having debt is stressful, and it's not necessarily a conscious stress, but just having a couple $100,000 weighing on you all the time, it does exact a financial and psychological toll, actually. So when we say career, I think it's just because we spend so many
much time
years studying. Yeah. It's not only college, right? It's 4 years of college, then it's 4 years of medical school. Yep. And then it's 3 to 7 years of residency training. And training, that's an educational part as well, where you're making very little money. So all of that combined, you're talking about at least a decade after, most people have already started working.
Yep. And it's just continuing to accrue that debt. And we've talked about this a lot. Thomas and I have good debt versus bad debt. And you, as an experienced real estate investor, kind of weigh that difference. And when you look at the debt of med school, the educational career there, it is an asset in itself, but it takes that action to have that return. So it's like teetering that line of good debt, bad debt, because there's no necessarily direct return on it unless you implement yourself and then, trade time for money, building those skills in order to recoup that expense.
Yeah, I think that's why it is so surprising to some people that some doctors choose to not do medicine after a certain amount of time. And it's really tragic when it happens in the middle of residency or in the middle of medical school, because you incur so much debt and then you don't have that doctor's salary to pay it back. So it can be a pretty desperate situation when someone wants to pursue that, but for whatever reason, due to health or due to educational challenges, they can't get there. But then by the same token, I think it's very surprising when someone invests all that time and then chooses to either scale back or retire early or things like that. That's a lot of sort of bias and a lot of harsh feelings that sometimes doctors will incur when they make that choice.
Yep. How long have you been out of residency, Daniel?
It's been about 6 years.
6 years. So if you could look back 6 years ago, what would you tell yourself leaving residency? What's something that stands out to you that would have been helpful?
So, I think that, first of all, I would have said congratulations, because
celebrate the win.
Yeah,
Yeah.
residency is probably the most challenging time of a doctor's life. It's because you're learning so much and the demands on you are so high. And depending on your program, it could either be a pretty supportive environment or it could be a really malignant environment where people are really on you in a negative way. So it can be super challenging. So just getting through residency training for doctors, I think, is really an achievement. And I think people often, they'll congratulate themselves and their families will be happy. But I think as a community, we should say that it is a big achievement to get through that process.
Mhm. Absolutely. Yeah. Congratulations. Absolutely. I think that's a great way of looking at it. Um, and I just think of that, maybe even reaching back a little bit further, like prior to that, what's something that you would have said to yourself before residency, like coming out of med school prior to that residency? What's something that you would have, something you would have loved to say, hey, Daniel, listen to this. Like, what's that?
Yeah, I think it is specific to my situation, but so I did a surgical residency, urologic surgery. It's involves a lot of surgery and involves many long hours, and the environment is often very intense. And in my particular program, I don't think it was as supportive as it could have been. I hear it's a lot better now. But there were a lot of sort of emotional challenges of confidence and things like that when you're surrounded by a lot of people who might not be as supportive as they could have been, right? So I think that's something I would have told myself is, trust in yourself. You know that you're hardworking, intelligent, and well capable of handling all these challenges. And maybe don't let an unsupportive environment kind of get you down. There were definitely some points in my residency training where I doubted myself just because I don't think it was as supportive as it could have been. And I think sort of a little bit of inner fortitude helped me get through that, but I could have used a little more, honestly.
Yeah. So some support. And then definitely once you did get there, it was congratulations, right? So those two things are definitely some notes to take down through the process. I think that aligns a lot with even after leaving medicine and getting into not leaving medicine, but leaving the educational career into medicine. And now you're starting to make this income, right? This return is starting to come. And what I'm excited to talk about is then your experience and the experience you're sharing within your blog and the social media platforms about investing and real estate investing. And I think you've got a really good experience built up already. I know. So you've got a portfolio in Indianapolis, right?
Mm-hmm.
And you share what I love about your website and your content is you share your experience, like case study style stuff. And can you tell us a little bit about that, your journey in real estate? Like, where did it start, and where are you at now, and where do you want to go?
Sure. So I'll just say where I'm at now. And essentially, it's a growing real estate portfolio. And over about 3.5 to 4 years, I've built up to a portfolio of 28 units, which is comprised
congratulations.
Thanks. It's a number of properties spread across a number of states. Right now, we invest in California, Indianapolis, Arkansas, and also Oklahoma. And it's a mixture of long-term and short-term rental properties. It's all residential. And it's everything from a single family home. We've got a few of those to a couple of small apartment buildings. And it's certainly been a process, but essentially we didn't start out in real estate. When I was starting to write my blog, one of those things about continual evolution, I said, well, wouldn't it be great to be financially independent? And, at the time, I was coming from the perspective of feeling actually a little burnt out. I was working 60 hours a week. I was driving 10 hours a week in my commute. And I was already good at my job. And I just wasn't sure about what the next step was going to be. So I had this kind of feeling of staticness that I just really didn't like. So I was thinking, wouldn't it be great to be financially independent? That way I could make my own choices about how much I want to work, about where I want to work, what type of job I want to have. So I seized upon that as the kind of short-term to mid-term goal. And I actually mapped out this 15-year plan where I was just going to invest like crazy into index funds. And it was hundreds of thousands of dollars a year that I was just going to save. And we were going to be, very intentional with our spending, which is tough to do because we lived in Southern California. And then I actually started doing this. And then after about a year, I had this realization that on the hundreds of hours of podcasts that I was listening to and the books that I was reading, that some people were getting to financial independence much, much faster than the rest. And the common thread was that they were all real estate investors. And as I started learning about that more, I was like, wow, this actually makes a lot of sense, because when you are trying to get to financial independence with stocks and index funds and things like that, that is the traditional way. But you have to basically accumulate 25 times your annual spending in stocks so that you can abide by something called the 4% rule, where you just withdraw 4% of your total, and then you're pretty well set, right? But that takes a long time, especially if you have a reasonable, amount of expenditures, which we did with 2 kids, with living in Southern California, with things like private school. You have to save a tremendous amount of money. The thing about real estate is that, especially residential real estate, is that so much of your return is coming back in the form of cash that can displace your expenditures 1-to-1. So it can be a much faster way of getting to financial independence, because it's this perpetual return that you're getting in the form of cash. So the more I learned about it, the more I became convinced that real estate offers a lot of advantages. The other thing that was really appealing to me was that it's so tax efficient. And especially in California, we were paying a tremendous amount of taxes, both to the state and federally. And as a W-2 employee, there was very little I could do to displace that and be more tax efficient. And in real estate, basically the government, as I learned, and as you well know, the government incentivizes you to invest in real estate because you're providing housing, you're providing jobs to carpenters, electricians, real estate brokers, mortgage providers. So they give you tax incentives. And I found it just a much more tax efficient way of investing that was going to get me to financial independence faster. And that's why I started buying real estate.
Very cool. I think I read one of your posts too. I believe it was about like an ER physician trying to afford a house within the area that they work.
Yeah.
In that certain area. Is remarkable to see. It's like, it's not even possible. And it's a high paying trade, right? It's a high paying skill. So it was remarkable to see that. Then you said displace expenditures 1-to-1. What do you mean by that?
So just basically the fact that you can take the rent income that you have and use that to pay for your lifestyle costs. So one of our biggest expenditures in Southern California before we moved out to Tennessee was our mortgage and private school. This was thousands of dollars that we had to make either in our day jobs or through some other method just to live in Southern California. Mm-hmm. And basically, you can make that in your day job. You can withdraw it from index funds and stocks, like is traditional. Or if you build up enough of a rental portfolio, you can just take the rent income that you get every month and just use that to pay for your expenditures. And on my blog, I did this analysis where I basically took the same amount of money being invested into real estate over a 10-year time period. I think it was 10 or 11 years. And I compared that to a fairly respectable investment growth in the stock market versus buying rental properties. And over time, it was much more advantage to do the rental property route. And I made some assumptions that I thought were pretty conservative, but after the analysis, I created the spreadsheet and made these charts, and I was convinced. I was like, this is the way to go. If you can do it and you can get the education and learn how to do it well and consistently, rental property is a great investment for the long run.
Absolutely. Absolutely. So in that, if you can learn how to do it and do it consistently, what would you say was one of your biggest challenges as a physician launching into this kind of unknowingly, right? Doing your research, listening to podcasts, reading blogs, all that stuff. What was your biggest challenge launching into the real estate world, and what did you learn from it?
I think the biggest challenge for almost everyone is just getting started, because all the other elements you can kind of figure out, right? So there are a number of things you got to do. You have to gather together a down payment. And for me, I did that by cashing out stocks. I very carefully saved a bunch into stocks, and to push myself forward, I sold it because I knew that it was going to have a tax hit. And I knew that as soon as I had this cash just sitting there, it was going to stress me out, right? Because when I have cash in my account, I don't like it sitting there because, it'll probably just get spent. So I want to invest that. So by making that action, you get kind of give yourself momentum to get started. But that's the biggest thing, because you can get educated and it's not rocket science, right? It's very hard to become a physician because of the testing that is involved in passing all of those step exams and board exams. But real estate investing, if you just learn the terms and you learn how to do some very simple math, you can kind of analyze properties and figure out what's going to be hopefully a good deal or not. But pulling that trigger to actually buy a property is a big hurdle for most people because it's a lot of money. Even for your cheapest home in this country, if it's in respectable shape, you're probably going to be spending $60,000 to $100,000. And that is a huge, huge investment for most people, and for doctors included. So I think that hurdle of actually pulling the trigger to make that first purchase is probably the biggest hurdle out there.
Right. Yeah, absolutely. I just admire that path where you did the research, you pulled the trigger, and setting that kind of machine going forward and learning as you go. I think that's amazing. What are some of the returns that you expect from a single family rental? We'd have to make some assumptions in order to put that out there. But what's a typical buy window or return window for you, Daniel?
So I think that when I was first starting out, I was hoping for just an 8 to 10% return on my investments. And the reason why I was hoping to get that is because it seemed to be achievable at the time. This was 3 to 4 years ago. And also it was a comparable return to the stock market. So I knew that there were other benefits of investing in real estate other than just the cash flow, the cash on cash return. There are tax benefits, there are principal pay down, there's appreciation, there's all these other things that you gain and over time really are better than stocks, in my opinion. But I wanted to make sure that the very basic, return in form of cash was going to be comparable to the stock market. So I was shooting for 8 to 10%. And I think that is very achievable, but there are a lot of variables, as I've learned, that can throw that one way or another in any given year, including, repairs, including furnaces that break down, and including various animals that intrude into your home and things like that. These are all things that can affect that in any given year. But over time, I think that that's an achievable return, and you could actually get much, much better when you consider all the other ways that real estate makes you money.
Yeah, absolutely. Now you're starting to talk my language, Daniel. This stuff excites me. So that 8 to 10%, we're looking at what's basically like a cap rate, a capitalization rate on a straight cash purchase. This is I've put in 100,000 and this is what I'm getting back annualized, right? So if we look at that 8 to 10 pocket, do you leverage debt, what we call good debt, then to exponentially increase your return?
Absolutely. Yeah, I did. And all of my properties have a mortgage on them. And, I think this is we have to keep in mind that when I was starting to invest, interest rates were quite low, historically low. It was 3 or 4 years ago. And the average interest rates that I was getting on the mortgages for these rental properties was probably around 5%, which is now, you're looking at 8-9% in some of these instances. I don't know if that's your experience as well. So it actually made it a lot easier to use debt. And also that was helping me was having that doctor income, because I was working full time, and I had a very respectable income that basically made my debt to income ratio endless. I could get a lot of mortgage debt. So those factors made it really easy to get mortgages for these rental properties.
Yeah. And that's really, now we're starting to to touch on this thing I call stacked returns. And, I've learned this from other people, not coining the term. When we stack these, once we leverage that good debt, then we have that principal pay down piece. So that's going to increase our return. And then you mentioned appreciation, even straight line depreciation. Something else that you talked about too is the short-term piece of it. So in the world of displacing costs in income and stuff, there's this passive side of our books, and then there's an active side of our books. And as a W-2, that's your active income. And this world of passive income, I can't use my losses to cross that line unless I meet these a couple of criteria. And the thing that kind of perked my ears up a little bit, Daniel, was the short-term piece. There's a way that we can use short-term to create loss basically in depreciation, cost segregation, these ways we can create loss in the books, and then we can displace our active income. Is that kind of like your thinking path when you went for the short term, or is that just kind of a byproduct that happened along the way?
So I think you're referring to the fact that I own two short-term rentals now.
Yep.
One of them is a short-term rental in Palm Springs, and one of them is a short-term rental in Broken Bow, Oklahoma. And the reason why I purchased those was for two reasons. Number one, I am convinced that it's one of the most exciting areas to get pretty high returns. Less so now than a couple of years ago, but it's still a very exciting place when done right. You can get pretty amazing cash flow. But the other thing that really made me pull the trigger on it was the tax loophole that you're talking about. So as a doctor, one of the things that bothered me was that I have all this income and it's taxed very heavily at the highest tax rate. There's basically no shelter as a W-2 employee, right? If you're a professional, real estate professional, though, you can do what you said. You can do what's called cost segregation, where you analyze a property, and then you can accelerate a lot of that depreciation into the first year and get bonus depreciation. And it used to be 100%, now it's 80%, but it's really powerful. But you can only do it as a real estate professional.
Which is 750 hours or more, and 50% of your time focus on it, which is a lot, right?
Yeah, it's a lot. And if you're a full-time employee, even if you're working like crazy in real estate, case law suggests that you're going to have a really hard time with the argument to a judge and the IRS that you're a real estate professional if you're a full-time employed person, right? So it's hard for doctors to do it. It's hard for anyone who's fully employed. But there is a loophole. If you operate a short-term rental business, it counts as its own category, and the requirements on meeting the hours rules are much lower. It's very traditional to use 100-hour rule for short-term rentals, where you meet 100 hours of participation in the business, more than anyone else, and then you can do the cost segregation. You can do the depreciation and accelerate it. And if it's an expensive property, you can depreciate and write off active income to the tune of hundreds of thousands of dollars. And that's what I did a couple of years ago. And it's legal. It's memorialized in the tax code. And you just need a CPA who knows what they're doing. And then you need things like the cost seg and things like this. But it was very material for me in 2021. My wife and I wrote off literally $300,000 of our active income and received a tax refund from the IRS completely above board and legal of over $100,000. That is super material. And I was able to use that money to just pump back into other investments. And just like we talked about before, this is nothing shady. It's just us doing what the government wants us to do, which is create jobs and invest in real estate.
Yep, absolutely. Congratulations on that, Daniel. That is so awesome. It's so exciting to see because it takes work, right? It's one of those strategies where, you can hear it and it sounds great. But boy, does it feel different after you implement it. And it's not all sunshines and rainbows getting there either. There's challenges, learning, the energy expended getting there. But man, congratulations on that. That's really exciting. So in that same conversation, sometimes I talk about your partner or your spouse when we're looking at the real estate professional. regulations. So is that something, I mean, but also we find that a lot of physicians are married to physicians, so it doesn't help. So there's that opportunity where if your husband or your wife is a stay-at-home parent, or just a stay-at-home person, they don't have that full-time job. There's also opportunity to allow your significant other to be that real estate professional.
Yeah, I think that is often a really good match. When, again, as you mentioned, a lot of doctors do marry doctors. And I think it's just because they spend so much time together in medical school, in residency. If they're not married, there's a good chance that they're going to find someone who they're compatible with over over that decade of training, right? But you're right. So I think it can work really well if your spouse has an interest in real estate. It can be an awesome match because the doctor can be the sort of income machine, make that doctor income. And then you could pump it into real estate. And then if your spouse is willing to put in the hours to meet the real estate professional status, it can be a super good match. And that's exactly what one of my buddies is doing up in Buffalo. He's a plastic surgeon. He's part of our blogging network, the free network. And, they do that. He makes the income and he loves real estate investing also. He's called the prudent plastic surgeon, and his wife is a real estate professional, and they are just killing it with tax efficiency, and I love it. I love to see it.
Yeah, it's exciting. So you could see the just light go onto my face talking about this stuff. I love, because I hear it, I see it implemented, I implement it myself. I just love sharing it, and just that's the thing is, like, the reason why we get to do this podcast is sharing examples like this, because how many lives could that change just by that simple thing that we all have the opportunity to do, right? How do we get there? What are the ways that we can actually take action? Resources, relationships, friends. A lot of times people are already doing it around you. It's amazing. Where do you find your deals as a physician? Because it takes a lot of time sometimes, right?
It does, and so let's summarize where I'm at now. So, I talk about when I lived in Southern California. So about 4 months ago, my family moved. We live in Tennessee right now, just to kind of update you. We're in Memphis, and we moved here because my wife got recruited to an awesome job here. And as we've lived
Congratulations.
here... Thanks a lot. Yeah.
That's awesome.
And as we've lived here, I think there's been some times recently, especially when Memphis has been in the news for some tragedies. And, that is true. That happens here. But I think nationally, the media is ignoring a lot of the awesome things that are happening here. And I'm very excited to live here, actually. But what allowed me to say to my wife, yeah, you should take this step in your career, you should go for it, was the knowledge that, at the time when we were moving, we had already accumulated a large rental portfolio. We're looking forward to a 6-figure, rental income in 2023.
Nice.
And we had made these choices that gave us the financial flexibility to do that, where I could say, I'm going to quit my well-paying full-time job, and then I'll just figure it out. Luckily, urologic surgeons are in high demand over the country. There's unfortunately a physician shortage overall, but it's really bad for your urologists. So those factors allowed us to make the move here. Having that security of a rental portfolio allowed us to have that flexibility and confidence that we'd be okay, and we'd land on our feet over here.
Yeah, that's very cool. And then coming back, I guess, just going back and looking at the first acquisitions you made, would you have any suggestions to other physicians who are ready to take this jump, maybe convert their stocks to a down payment? What suggestions do you have?
Right. You had asked, essentially where to find deals as a doctor or anyone else, but I think it really comes down to having either a network or just a good real estate broker. A good real estate agent, real estate broker who understands real estate investment. I think it's really important to have on your team, and it kind of all starts with that, because that broker will be able to connect you with pretty much everything else you need in terms of construction, in terms of a mortgage lender. It comes down to finding that real estate broker. So when I was literally starting and thinking about where am I going to buy investment properties, I actually bought 2 turnkeys to start off my portfolio because it's really the easiest way to do it. And I still own one of them. And a turnkey rental, a lot of your listeners may know, but basically it's gift wrapped for you. You know, this company has taken a distressed property, they've fixed it up, they've likely put a tenant in place already, and they're going to property manage it for you, and they just sell it to you, right? You can still get a mortgage on it, and or you could buy cash. But basically, it's the easiest way to get into rental property. There are downsides to it. You know, they sell it to you at a markup. You're kind of getting it at a retail price because they've put in the work, they've taken the risk to do everything. But for me, I was looking at it and I was like, wow, I have a lot of anxiety about this purchase, about getting into real estate investing. Maybe let's lower some of the barriers. Let's start it out by doing it this way. And once I see how that works, after I bought 2, I was like, okay, I think I could do this on my own. So I created a team of my own in Indianapolis. And I essentially reached out to friends. I said, where are you investing? And one of my friends that I had met on Bigger Pockets basically said, oh, I invest in Indianapolis. You're welcome to reach out to my broker. And I did that. And eventually I didn't end up using their broker, but I found my own. And that contact has led to 6 buildings that we have in Indianapolis that is comprised of 23 units there. So wow. That's how it started.
Very cool. Yeah. Relationships is what I hear, right? That's the biggest piece, the brokerage piece. And that kind of entry level barrier with a turnkey, you know, it's going to be difficult to find that 8 to 10% cap on a turnkey, right? So you may have to lower your wall just a little bit to get through in order to get that, and realizing that the value that's in place, that this is already done, right? Typically, a turnkey is going to come with a property manager. One thing I would encourage everybody to do is know what questions to ask when you're working with property managers. Brokerages like too, just knowing what questions to ask, what makes sense to you, what's going to make your investment journey work for you in your current position, right? I think that's really important. Is there anything that you would want to share with the listeners out here of the podcast? I mean, how can we stay in touch with the Darwinian Doctor? I mean, you've got so much to share. I'm so excited to have this opportunity to talk with you. How can the folks keep up with you? And is there anything that you could let them know to kind of watch out for?
Sure. I would say that the easiest way is probably through my blog, the darwiniandoctor.com. And you know, basically, that's where a lot of the nitty-gritty details about my real estate investing lives. And it's definitely not all unicorns and rainbows. You know, I just talked to my property manager in Indy last week because, you know, a furnace went out. And, you know, that's one of the things in wintertime that you cannot sit on, right? So the furnace went out. It's a little old. I thought that we would get a few more years out of it, but it goes out. So right then, you know, $5,000 goes out of your pocket to cover that cost. And there's a lot of these things that can happen, even things that you don't think could ever happen. Like there was a raccoon that took up residence, you know, under the gutters in one of my other properties, and you got to pay animal control to go get it out, right? So yeah, a lot of these details, and I think important experiences live on the blog. So that's where I would go. I'm also active on social media like TikTok and Instagram, and I'm at the Darwinian Doctor on basically everything.
Awesome. Yeah. So everybody can take up their favorite platform and find you and just follow along with your experience. I mean, you're sharing so much, and there's so much that can be gained just from being around like-minded individuals. It's a privilege to have you here and share that journey with us. I've really enjoyed the conversation. Man, stay tuned and make sure you guys check out the Darwinian Doctor. Daniel, it's been an absolute pleasure speaking with you, and I look forward to continuing our conversation.
Likewise. It was great talking with you both. Thanks.
Awesome.